to catch the market either way it goes. Don't forget the NFP numbers just before, so it comes out about 1:30 p.m. London time, GMT, and the market is thinning out. And then once the number comes out, so if the number is great, you tend to see the market rally all the way to the upside, okay? And if the numbers are terrible, you tend to see the market break all the way to the downside. Hey guys, and welcome back to my channel. My name is Dapo Willis. Now, like I was saying earlier, guys, today we're going to be debating fundamental or technical analysis, okay? So I'm going to be explaining to you guys the difference between both, the pros and cons of both, and which one you should be using for your trading, or actually, preferably, how you can use both of them to make more money in this market. But before we go into the nitty-gritties of this video, I want you guys to do me a little favor. Just smash the subscribe button right there. Just smash it right there, and just drop me a comment. Tell me how this video was helpful so that I just can keep making more videos, okay? And it helps me with my YouTube algorithm. The more comments you guys drop, the more people get to see this video, and everybody's happy, okay? The more people get to learn from this video, okay? So just hit the subscribe button, drop me a comment, and smash the like button. All right, guys, so let's proceed. So the first guy we're going to be speaking about is fundamentals, okay? Mr. Fundy, right? So what are fundamental, what basically is fundamental analysis? Now, fundamental analysis is basically when a trader, just say you are the trader now and you wanted to buy the euro, okay? Fundamental traders look at fundamentals that go on in a certain economy before they get into before they buy the particular currency. So basically, guys, fundamental traders like to look at fundamental stuff. What are the fundamentals of the economy? Now, fundamentals are basically macroeconomic factors. What do I mean by macroeconomic factors? Don't worry, it's not that complex. Macroeconomic factors are things like GDP, interest rate, and unemployment, okay? I think these are the three most important fundamental factors that fundamental traders like to look at before they get into any trade. Now, like I was saying, you wanted to buy the euro, you would obviously want to look at how healthy the eurozone is doing, because if you went and bought the euro and the GDP numbers over the last 3 quarters have been absolutely terrible, the unemployment rate is so high, you know, and the interest rate is just pure shit, chances are that the euro is going to tank, okay? So if you wanted to buy the euro, you want to look at all these factors so that you know the health. Fundamental traders look at these macroeconomic factors to gauge the health of the economy that they're going to be investing in. Every currency you buy, you're pretty much investing in that country's economy, okay? So that's exactly what fundamental traders do. And yeah, pretty much. Now, I remember when I first started learning how to trade, yours truly was a fundamental trader when I first started learning how to trade, and I actually had a fundamental strategy, okay? The strategy revolved around the non-farm payroll, yeah, NFP. For those of you who do not know what NFP stands for, non-farm payroll. The non-farm payroll is the total number of jobs created within the US economy over the last 30 days. Now, as you can see, that has to do with employment, right? Now, NFP is one of the strongest macroeconomic news events to come out of the United States. Now, guys, the strategy basically comprised of me basically scrolling down to a lower time frame. Okay, so let me show you guys some example. My fundamental strategy, okay? This was my fundamental strategy that I used when I first came into the foreign exchange market. Like literally, guys, I used to wait first Friday of every month, because that's when the non-farm payroll numbers come out. Remember, like I said, NFP stands for the job numbers. The job numbers that come out from the United States every 30 days, okay? So as you can tell, if the numbers come out great, okay, so if NFP, non-farm payroll numbers come out great, the market shoots all the way to the upside. And if the numbers come out terrible, the market shoots all the way to the downside. I'll take that again. Non-farm payroll basically is the total number of jobs created in the US economy. So if employment numbers are great, the market will rally to the upside. And if employment numbers are terrible, the market will fall all the way to the downside. So, you know, as a smart guy, I thought to myself, I was like, okay, well, if that's the case, all I needed to do was, I was just simply gonna wait for the first Friday of every month. And I also noticed that just before the news comes out, the market tends to get very thin. So the market tends to, let me just move my whiteboard. The market starts to look like this, very thin, okay? I said to myself, if the market is very thin just before NFP numbers come out, and once the numbers come out, then the market tends to jump. Okay, so basically, if, like I said earlier, if the numbers are good, the market will rally all the way to the upside, and if the numbers are terrible, the market will collapse all the way to the downside. So I did a very clever thing by going to basically, or at the time I thought it was really clever. So I said to myself, let me go ahead and set some sell orders. Sorry, my marker seems to be acting up. Give me a moment. I said I was going to go ahead and set some orders, right? So I was going to set a sell order somewhere about here, okay? Somewhere around here. And I was going to set a buy order somewhere around here. Now, the essence of this was basically to catch the market either way it goes. Don't forget the NFP numbers just before, so it comes out about 1:30 p.m. London time, GMT. And the market is thinning out. And then once the number comes out, so if the number is great, you tend to see the market rally all the way to the upside, okay? And if the numbers are terrible, you tend to see the market break all the way to the downside. So I said to myself, I was just basically going to set some orders around these, okay? Around these, around the coin market price just before the NFP figures came out. And I said to myself, okay, if it's good, I'm going to have a buy order at the top, and if it's bad, I'm going to have a sell order at the top. So whichever way the market decides to blow out, I still get to be profitable at the end of the day. Now, if you didn't really understand what I just said, I'm going to take it again. The market thins out. Okay, so the market is very thin, low volume, because all the traders are pretty much waiting. All the traders are pretty much waiting for the numbers to come out, because the numbers are so important. It literally is the best way to gauge the health of the US economy. Okay, so all the traders are pretty much waiting for these numbers to come out. So before the numbers come out, before the NFP number comes out, the market tends to be very thin, very, very thin. So, you know, like I said, being the smart guy that I am, I set a buy order 10 pips above, so that if the numbers come out great and the market wants to rally to the upside, it will take my buy order and I get to make a lot of pips. Now, guys, you have to understand that about 6 years ago, when I was using this strategy, anytime the NFP numbers came out, the market pretty much rallied as much as between 100 to 150 pips. Now, that's a lot of pips, okay? Now, just imagine if you are trading $50 a point, that's $7,000 right there. That's a lot of money, okay? So I said to myself, I'm going to set a buy order right above the market, and I'm going to set a sell order. So if the numbers come out great to the upside, if the numbers come out terrible, you know, the market was going to break to the downside and trigger my sell order, and then I was going to make all these pips to the downside, and if the numbers were good, I was going to make all these pips to the upside. So this was pretty much my fundamental strategy, okay, guys? However, what now started to happen, oh my days, I'm wasting this freaking leaves, but you know, I don't really care as long as I get to explain this stuff to you guys, okay? So I'm going to draw it out again pretty nicely. So this is the market pretty much thinning out, okay? And these are my orders, okay? These are my orders, okay? Right about here. Okay, so the idea, I'll take it again, the idea is if NFP comes out good, the market will push to the upside, okay? Trigger my buy order, and then rally all the way to the upside, and I get to make almost 150 pips. Or if the NFP numbers came out terrible, the market was going to come down here and break here for a sell trade, and then, you know, I was going to make all these pips to the downside. So this was pretty much my fundamental strategy. However, something happened along the way. Now, these bloody market makers, freaking crazy guys, market makers and brokers, absolute worst people in the world. But you know, you just gotta love them, because without them, this market wouldn't function, okay? So what this market makers started to do was, they started to realize that everybody started putting their orders just above or below the market before the NFP came out. So what this guy started doing was, they will go just before the news to come out, right? They will go and spike the upside, okay? So they will trigger you for a buy trade, okay? And then they will come back down and trigger you for a sell trade. And then, so now you have a buy and sell open, then they will come and keep the market somewhere about here. And then before you know, the market just tanks all the way to the downside. I know you're probably thinking, hey, but the market still went down. Don't forget, you have a massive buy trade as well. And it's also very possible for them to trigger your sell trade somewhere all the way down here. because there's something called a spillage. I don't know if you guys can see what I'm showing you guys. Let me just raise it up pretty nicely, okay? So don't forget, this is the market thinning out, and this is the buy trade, this is the sell trade. You can see they will come and trigger out your buy trade, come out and trigger your sell trade, and they might not necessarily even trigger your buy trade about here, at where you put it, due to something called spillage, or like they claim. They might come and trigger your buy trade all the way up here and trigger your sell trade all the way down here. So between here and here, you're in a massive loss. So over a period of time, I found out that it was almost impossible for me to be consistently profitable with this strategy. However, for those of you who are watching this right now, feel free to take this strategy up. Feel free to go and refine it. You might find a way to be profitable with it. I just found a better way for me to go about my trading. So guys, this is one way. This is a fundamental strategy that I was using during my own trading. So let's quickly recap what fundamental trading is all about. Like I said to you guys, fundamental trading is when a trader looks at the macroeconomic factors, macroeconomic news of every single country that they want to be trading their currency. Okay, don't forget, when you're trading a country's currency, you're pretty much investing in that country, and you do not want to be investing in a country that has terrible GDP numbers, horrible unemployment figures, and has, the interest rates are just appalling, or even worse, the country is about to get into some kind of a war. I remember, was it Russia? I remember when Russia was, having this economic tussle with the United States, and then Russia had that mad sanction that they slapped on them. I think this was about 4 years ago. Russia had this economic sanctions slapped on them by the United States, and guys, the Russian currency just plummeted all the way to the downside. So imagine if you were buying, or imagine if you had invested in the Russian currency. I can't remember what the currency exactly is called, the Russian, I think krona, whatever it is it's called. I don't really trade currency anyway. So imagine if you were invested in that currency, and then America came and gave the Russian government that sanction. Imagine being in possession of that Russian currency when the market was just all the way sliding all the way to the downside. You wouldn't want to be in that position. Now this is where fundamentals are absolutely amazing for you to trade, because now you know that you're able to look at macroeconomic factors before you get into any particular currency, so that you can save your ass in case anything bad wants to happen. Or better still, you can position yourself in a situation. For instance, the US economy has been absolutely growing since Donald Trump became president. The non-farm payroll numbers have been looking really good. Don't forget, non-farm payroll numbers are the total number of jobs created in the United States economy. Those job numbers have been absolutely fantastic. I don't know what Donald Trump is doing. The guy just seems to be doing something right. So the numbers have been very good, and that's exactly why the US dollar has been strengthening across board. GBP has been falling against the dollar. The euro has been falling. The dollar has just been strengthening because of these amazing job numbers. All right, guys. So yeah, I think that's pretty much about it for fundamentals. Now, there's one last con I'd like to tell you about for fundamental analysis and fundamental trading. Now, guys, the reason why I also do not really like to use fundamentals as well, okay? Now, fundamentals are good to, don't get me twisted, fundamentals are good to understand, the general, when I mean general, I mean the entire perspective of the health of the country. However, just imagine, you looked at the figures coming out of the Eurozone, for instance. Employment numbers are great, GDP numbers are great, interest rate is absolutely fantastic. All the economic factors that you should be looking at are looking quite great. Now, you have to understand that the market is crazy, man. The market is moving up and down, constantly moving up and down, constantly moving up and down. Now, you have this very massive chart right in front of you, and the Eurozone is, like I said, the macroeconomic factors are looking very, good and all that. But the market is quite choppy, like not necessarily choppy. The market is, it's doing this thing, it's going up and down. As a fundamental trader, you just, do not know where to get into the market. Like, the economy is good, but where the hell do you buy? Okay? Because, for instance, the market can be trading somewhere about here at this time, okay? When at the point of your analysis, the market can be trading right about here, okay? And then everything is going well, the Eurozone, everything is smiling, and everything is all dandy and all that. And then next thing, Okay, you're like, all right, everything's fine, and then Monday morning you go ahead and place a buy, and then by the very next day you're down, okay, and then obviously you wake up the following day and you have some more profit, and then what happens? Oh, the market has collapsed all the way to the downside. What I'm trying to say in essence is that as a fundamental trader, you just, I mean, you can't just go and buy, because you need to have some form of a strategy, a chart strategy, a technical strategy for you to get into this market. Because even when all the fundamental factors line up pretty nicely, you can still lose money in the market just by simply looking at the fundamentals alone. Now, this is exactly why I tell a lot of people not to really watch the news that much, because the news fundamentals, as far as I'm concerned, are just a distraction. Okay, I'm sorry to other fundamental traders out there. The fundamentals can be, a distraction every now and then. So I like to stick to the next guy I'm going to be talking about, which is technicals. I'm more of a technical guy. Okay, and yeah, so don't worry, I'm going to be teaching you guys how to marry both of them, both fundamentals and technicals. Fundamentals are good. Like, look at what happened in Russia. If I was not looking at the fundamentals and I saw a buy setup on my technicals, I would have gone to buy and then gotten crushed because I failed to look at the fundamentals. Just try to explain my point that both of them can be used hand in hand. Do not neglect one for the other. Just that I tend to lean towards the technicals a lot more. So guys, I'm going to be taking you over to the next order of the day. Order! Mr. Technicals, text. I love me some text, man. Technical analysis, okay? Pardon my writing, it's absolutely horrible. Now, what exactly is technical analysis? Technical analysis is basically when a trader uses past price performance, past price action to predict what's going to happen in the future. Now, for some strange reason, the FX market just loves technicals, okay? I realize that over time, the market tends to repeat whatever it did in the past, okay? History always pretty much repeats itself in the foreign exchange market. So what other form of analysis to use than technical analysis? Technical analysis is your ability to use past price action to predict what exactly is going to happen in the future. So that's exactly why I like to use technical analysis. And in technical analysis, we like to use tools like trend lines, support, resistance, all that stuff. Okay, we have trend lines, TLs, we have support and resistance, we have price action, we have Fibonacci. I love me some Fibonacci. Okay, guys. So these tools, the reason why I use these tools for my technical analysis is to basically help me pinpoint. Now, let me take you back. The reason why I love to use technicals is, just look at this chart right about here, right? As a fundamental analyst, right, you've done your analysis and we decided to buy about here. And then what happens? The market starts to spike all the way to the downside. As a technical trader, I have no business. I would not even be buying about here, okay? I would like to wait for the market to form a trend, a technical trend, making lower lows and lower highs. And then I would want to trade off of that technical trend. Okay, so you can see how if you're just using only fundamentals, you're pretty much going blind into the market. But as a technical analyst, you can pretty much pinpoint better entries. You know where to put your stop loss. You can estimate your risk. You can estimate the turning points in the market. Oh my Lord. Like, as a fundamental analyst, you can't do any of this. You do not know the turning points in the market. Okay, you're pretty much blind. You're just looking at some reports that some economists put out there. As a technical analyst, as a chartist, you get to understand the flow of the market, man. What are you on about? All right, so now, like I said earlier, guys, how do you marry both of them together? How do you marry fundamentals and technicals together? It's very simple and very straightforward. Well, like I was saying earlier, I'm 95% technical, okay? So I would first of all do my technical analysis first. Technicals first, open up the chart. If you do not know how to do technical analysis, check out some other videos on my channel. I'm always screaming about technical analysis and how, my channel will literally take you from scratch as to how to get started trading in the Forex market and how to, start using technical analysis. So if you're confused about technical analysis, check out some of my other videos, but always do technical analysis first. So I remember there was this particular trade, I'm probably going to throw in a screenshot somewhere in this video. Now, it was GBP USD. Now, GBP USD being the cable, what happened was I saw a very nice shorting opportunity on GBP/USD on the big time frame, on the weekly time frame, and I was getting ready to go short. Like I was bearish because the trend was looking down, was making lower lows and lower highs, lower lows and lower highs. So I was getting ready to get into the GBP/USD short, right? And I was, 95% already focused technically on that chart. I was gonna start selling this market. And by the time I did some fundamental analysis, I realized that Brexit was just around the corner, okay? And Brexit pretty much meant that the British economy was actually slowing down, or there was some form of uncertainty about Brexit as to whether the UK was going to leave the EU and stuff like that. Okay, they already left the EU. Just basically some uncertainty about the economy. And now, once there's uncertainty around any economy, back to fundamental analysis, once there's uncertainty around the political factors, about the economy, what tends to happen is that a lot of traders, a lot of investors tend to flee away from that economy, causing the currency to pretty much, plummet, causing the currency to pretty much crash. Okay, so now you can see how I've done my technical analysis, and then I can see pretty much a sell opportunity. The market was looking bearish technically first. GBP/USD was looking technically short. And then, as God will have it, as Mr. Fundamentals will have it, the Brexit was just around the corner. So you can see how I've used both of them, married them both. Guys, I made over 1,600 pips shorting the cable. Absolutely huge move. One of the most amount of pips I've made in my Forex career. Like literally, guys, I've been shorting the cable for, I think, all the way back from, when did that move happen? Probably about June of last year. Yeah, I think it was about June of last year. That's when I started shorting the cable. So guys, I've been shorting the cable for quite some time now because, I saw the bigger picture. Guys, I'm always speaking about looking at the bigger picture on the technical chart. So I saw the bigger picture on the technical analysis chart, and then I wanted to get short. And then Brexit was also the catalyst. Now guys, that's the word I've been looking for, catalyst. Fundamentals are catalysts, okay? Once you're in a technical trade, the fundamentals most oftentimes than not come and help you push that trade in your direction. Fundamentals are catalysts. Fundamentals is not the reason why the market is moving. Technicals are the reason why the market is moving, and fundamentals just give it that push. All right, guys. On that note, I love you guys so much. I hope you found this video very, very helpful. Once again, smash the subscribe button, and I really appreciate it. Smash the subscribe button. If you found this video helpful, kindly comment below, and feel free to say if you're a fundamental or technical analysis. Just drop me a comment below. What kind of trader are you? Just tell me. Are you a technical? Actually, there's one last one called sentimental trading. I don't really believe in that. So there's technical, sentimental, and fundamental. Okay, so just smash a comment below. Tell me what kind of trader you are, and I'll be sure to respond to you guys. Let's chat in the comment section. All right guys, on that note, I love you guys so much, and I'll see you guys in my very next video. All right guys, adios amigos, and peace out. Bye. Take it easy. Bye.